Are we on?
Not yet, I see.
We are live.
Yeah.
Okay, what's up? So I think we'll start. Hi, Boris. What's up?
Hi, great to see you. Looking forward to our webinar.
Yes, good to see you as well. First of all, I want to say thank you to all the participants of the webinar. We're welcoming you. That's our next Stobox webinar. And today we're going to talk about the Fintech, about the tokenization, and about how Fintech can benefit your business or any business. My name is Jim Dave. I'm CEO and the founder of Stobox. That's a tokenization platform which is built on the DLT framework. So basically, it's a blockchain for securities. And here with us, Boris, a young, bright gentleman from Ukraine, who is apparently co-founder of Stobox as well, and head of analytics team of our company. And today, guys, again, we're going to talk about, first of all, building fintech projects. First of all, let me tell you more about what we focus, again, is building our proprietary network for securities. Secondly, we focus on the aspect of fintech and the digital innovation, how finance can benefit the business. And, we've done a great work in analysis and research last year, for the past year. We've also issued our book, and together with the Maltese regulator, MDIA, which is a digital regulator for different fintech solutions. So we issued a book which you can download from our website, stobox.io. Please check it out. It's free, so you can have a lot of knowledge gained from the book. And again, let's start, and Boris, can you please tell us more about the history, where these two words fintech came from as a one word? When did it happen, and what does it mean to all of us?
Actually, what fintech is evolved much through time. So, firstly, fintech was understood as a backbone of powering the banks. So what you have in banks, in financial institutions, etc. The critical point when what fintech is changed was 2008. So there are two things that changed in 2008 and enabled the fintech to become the way it is today. Firstly, it is the fact that crisis weakened financial institutions so much that they couldn't invest more into innovation and technology because they were concerned with actually paying off debt and surviving, and a lot of regulatory issues, etc. So they were, for this reason, innovation shifted from established institutions to startups and smaller companies, including companies in other industries. The second shift, which is perhaps even more important than the economical one, is a cultural shift. It was after 2008, the trust to financial institutions dropped extremely, and there were many people out there that wanted to democratize finance in certain way, to make it more transparent, to bring more people in, to bring new people in. And many things that we see today as pillars of fintech, as one of the largest companies or events, actually originated from that cultural shift. Take, for example, Bitcoin. It was born as answer to centralized financial institution and to the corruption side. Take, for example, Robinhood, which emerged as as an answer to enable more democratized investments into financial products. Then the regulation came in, and multiple digital banks, electronic money institution, and payment institution emerged. You may probably be familiar with Revolut and N26 as more common examples of large institutions that are leveraging financial technology. And
I would just add one thing for our listeners. Sorry for interrupting. Last week, N26 has closed another investment round for $100 million US, and they provide global payments built on new technology, building on a fintech. I think it's an AMI, electronic money institution. I think that's the regulation they work. But it's $100 million investment into the fintech itself, into one company.
Jean, you have disappeared. I can't hear you. Please do something with your sound.
I am here. I can hear you.
Right.
Can you?
Yeah, I can hear you well.
Good. I just said about the N26 that they just recently, last week, they closed the round for $100 million.
Mm-hmm.
Being just the payments solution.
Mm-hmm. Yeah, actually, the fintech as a market is growing extremely, especially in the shutdown world. The total market size of the industry, there are different estimates, but they're around 150,000 and 200,000 now, and the rate of growth is 25% CAGR. So you will have 300 or even more $billion in 2022, 2025. The industry is really large, and there are many solutions that businesses out there can leverage.
Great. But how do we differentiate between, I mean, as far as we know, and we've spoken to different clients, that most of them, they understand what the banks are and what type of businesses, what type of business they conduct. But now with the new regulations, with the payment institution, AMIs, how's that safe, and how's that fits into their, global area of finance?
So do I understand your question right? You're asking what role regulation and the new types of institution enabled by regulation are playing in the development of fintech?
No, what I mean is that there is a new regulations like AMIs, and what are they? Let's speak about that now. What are they in comparison to the classical banks?
Mm-hmm. Electronic money institutions are type of they're often called digital banks. So they provide most of the services that common banks do, except actually giving credits. You can open an account, you can deposit your money in, and you can do you can do payments. The difference from traditional banks, and this is the theme that you get again and again in many fintech applications, is that everything is done in a digital and streamlined way. So you can open an account in AMI completely remotely, in most cases in up to 72 hours if you're not a high-risk business. You can manage your account and your payments in a web application or in a mobile application, and you can do payments around the globe. So most of them are part of SEPA system and SWIFT system, which enable you to transact with counterparties around the globe without actually leaving your office, which is very comfortable and which makes your business operations more efficient. So you don't have to go to the bank and file paper documentation, etc.
I think that's a great evolution in respect to COVID-19, because most of our aspects of our lives are now becomes digital. And when you can open your bank account or digital bank account without leaving a sofa, fully remotely, and being able to make global payments, international payments from your mobile phone, that gives a much more, freedom in the way how you manage your finance, and it gives you much more protection in the COVID-19, post-COVID-19 world. I think that's another great advantage of fintech, is enabling those things to happen, because you don't go outside to your bank account, to a brick and mortar, sign the contract, to get the check, do the payment. Now you can basically manage everything anytime from anywhere.
Yeah, I totally agree that
that's a good thing. But now let's speak. Sorry, there should be a connection problem. But anyway, so that's a bit of the history and the general agenda. Let's speak about the actual usage of the fintech for the regular customers. How would you differentiate in that respect?
So yeah, now let's go from more theoretical part to the actual practice. And what are the applications of financial technology that businesses can really start using today to improve their business? All these solutions can be broadly divided into two groups. One group of solutions is when the business itself becomes a customer of a fintech company, of a fintech solution, and uses it for itself. And the other type of applications is when you become partner with a financial technology service and you basically share customers and you offer additional value to your clients. So let's dive deep into each of these areas. The first area about application when business becomes customer. So there I have many points here written. The first is one which we actually mentioned previously, is opening account in a more streamlined payment application. In order to be able to, you can actually deposit your share capital to such company, and now you can make payments and any operations more easily. And it actually matters when you're a cross-border business and you have counterparties around the world in many countries, often in other side of the globe. Being able to deliver a payment fast enough, do it without mistakes, is actually a competitive advantage that makes you a better and more reliable counterparty. And the solution that works for you depends on the nature of your business. So for example, if you have a global supply chain and you are quite a large business, then it may be feasible for you to actually build your own financial company, your own payment solution. And it is also what is quite often done. It is not very expensive. Or you may use some existing solutions depending on the type of business you do. That was the first application, one of the most prominent, which there are different applications that may be useful for different kinds of businesses. But this one, opening an account in a digital bank, is what I believe almost any business needs and any business will benefit from.
So just to summarize, so the main key point is payments.
Yes. The second related application is budgeting and financial management. So many payment companies, in most cases, these are smaller payment companies. They offer a dashboard and analytical tools for you to track your expenses, to segment them, to track their dynamics and how they change. And this may be very useful for the business to have visual representation of how your funds actually move, when they move, how much of them do you have, to be able to make more informed and better business decisions. So the next thing is a lot of software for financial management and analytics.
So you can build analytics on top of it and make sure that you know every single bit and the piece of your business managing online.
Yeah, actually it is common in companies of mid-sized companies, when the business owner is already not able to manage everything by hand and doesn't even know every single employee. But this is not yet big companies with established processes that everything becomes somewhat chaotic, and even business owner doesn't know what's happening. So financial tool different ERP tools, enterprise resource management, including your financial tools, do actually matter to allow you still control what you actually do with your business.
For a smaller business, especially for a
Yes.
small business. So for the big businesses, we know they have those systems and they're very well, prepared in that sense. But when we talk about the small or medium-sized business, that's could be a key thing, apart from the payments.
Okay, I have only started. So the third type of solutions are the so-called Reg Tank Solutions. Reg Tank stands for regulatory technologies. This is a number of technology tools that are used for better reporting and compliance. That is, if they're linked, for example, to your payment solution, they can automatically generate tax reports for you, depending on the type of the business you choose. And this may indeed be very valuable for you, not only to reduce operational expenses, to reduce the time and number of employees for this compliance, but even more importantly, you can reduce risk of actually making a mistakes and thus having problems with competent authorities. So Reg Tank Solutions are a really valuable tool for business, and especially for a business in the financial industry, because they have even small in most areas. Only large public companies have audit requirements and reporting requirements, etc. But in the financial industry, even quite small businesses are subject to reporting, to audit, etc. And for them, Reg Tank Solutions are even more important.
I would also add that, and you know that really well, that what we do with Stobox Chain for securities is not just to be able to provide technical framework for the issuance, but to provide regulatory rules for those securities to be issued and transferred and managed in a regulation, in a regulatory way. And that makes Stobox not only the blockchain chain, but also has a footprint on what you called Reg Tech.
Yes, I would say what we basically do, we do a system for operations with securities where all rules for these operations are hard-coded. So you cannot actually do a security operation that is not compliant with legislation, which is quite beneficial for any businesses, which not only for businesses whose actual business is transactions with securities, but for anyone who for any business where the ownership is represented by shares. So I believe that at some point all securities will be stored on distributed ledgers in a form which makes non-compliant transactions impossible. And even if now they are stored in paper form and regulators are quite cautious about digital innovation in the securities industry, I believe that at some point they will start enforcing the innovation standards in the industry, which it is already happening with public securities. The regulations, like for example, Central Security Depositories regulations, require that all public securities, publicly listed securities, are stored in a dematerialized form, because this is actually even more secure and less prone to manipulation, to fraud, than paper-based securities. And at some point we will have it with all financial instruments, and it will be required by regulator. And of course there is some evidence that many of these securities for many companies will be stored on our chain, at least I hope.
Yeah, sure. So now we just discussed that the payments, the analytics, the Reg Tech, the tokenization of securities. What are, if I can say, what are the most common applications, or what are the most interesting applications that you've personally seen of fintech usage, or what you find mostly kind of remembering?
Look, I would say that I cannot say what applications are most common, I can say what applications I do know, and this largely depends on the industry. So I'll just go. So I suggest I just present the all applications I know, all most of the which I know, and our listeners can decide for them which makes more sense for them and which they find more useful. So let me just go down my list. So the fourth solution that we find much is the so-called InsurTech, the smart insurance, which allows businesses and individuals alike to file insurance applications online, do it in a more streamlined way, faster, and what matters, allows the insurance cost to be uh, tailored and customized to the data of the specific business, which often may lead to lower costs if the business is compared to a low risk. So this is another great application of fintech, which may be valuable for many customers. The next thing, the fifth point, is simplified management of the cap table. So if you are, for example, a late stage startup and you have a few dozens or hundreds of investors in your cap table, and actually we've seen even companies with thousands of investors in cap table while still being private. We have a few of such customers. If you have several types of securities, if you have stock options for employees, then managing your cap table becomes complicated, and there are indeed fintech solutions that facilitate it for businesses managing their cap table.
I would also, excuse me, I will just add one thing to the top of this. It's not just managing cap table, but the managing a corporate governance, which is a very important key point, because having stakeholders or shareholders, it's it's one thing, but being able to, let's say, to transform SPA or share purchase agreement and the terms of share purchase agreement into the rights and into the system where you enforce corporate government rules. That's another very important aspect of fintech, what fintech opens. Is that right?
Yet, so you should definitely distinguish two generations of the cap table management software. So the first generation does not enable, in most like Carta, for example, they do not enable corporate governance and having built-in SPAs, but the second generation cap table solutions that are based on securities tokenization, that is storing securities on blockchain and distributed ledgers, they in some form enable having corporate governance built in and simplified. And definitely there will be further evolving, and we ourselves participate in the evolution of such technologies for the corporate governance and corporate action, which is one of the things that is most complicated. Corporate actions to be streamlined and facilitated in the digital way.
Sure.
The next type of solutions, which may be useful for many businesses, is crowdfunding. So do not be confused here. When we hear the word crowdfunding, we mostly think of Kickstarter or Indiegogo, when you have small companies and you offer, for example, pre-ordering your product to your customers. However, there's also what is called equity crowdfunding. That is when you offer equity, or you may also offer debt in your business to multiple investors, to hundreds or even to 1,000 investors to raise capital for your business. And that is another application of the fintech that I find that opens new business opportunities. We've seen many businesses for whom raising capital is problematic. For example, one of our clients is a vessel company, and these are big profitable businesses, and the only way to raise funds for them is to go to a bank, which charge like extremely high interest rates. And we're discussing how we can do actually crowdfunding platform, so that to tokenize their vessels, for them to be able to raise capital from a larger public to their business, and thus having a cost of capital lowered for them.
I just want to add one thing, probably to our listeners. So basically, that concept allows you, the concept of tokenization allows you to become an issuer, depending on the certain jurisdiction where you have more rights and more freedom to do so. So you basically issue your securities on chain in a regulated manner. And then you say, listen, I will go with an offering that says under EU Prospectus Directive, or it's under US law or UK law. Then, so you choose that different type of investors, make yourself regulated in that way. And by having it on chain, you basically allow any person, any investor who comes with a digital identity, so who is a KYC proof person, be able to participate in that and become your stakeholder. So now your company, even though it's maybe a private company, it may have a bunch of international stakeholders, unlimited amount of stakeholders, or limited to the limits of your own jurisdiction where you make your offering from. But anyway, that tool enables you to fundraise globally and benefit from that.
Yeah, I believe at some point all businesses will have their security stored on distributed ledger, and you may have your small or medium-sized business in, let's say, Europe, in Germany, and Singaporean individual who has $10,000 and want to investment will be able to participate in your company to have such opportunity. It is already possible, and I assume that all businesses will have such opportunity in future.
With zero travel expenses. With zero travel expenses.
Exactly.
That's a very important thing.
The next thing is fintech solution for small business lending. In many countries, you have fintech solutions that enable small businesses to borrow up to $100,000 or $200,000 or euros, filing an application and having their application approved or rejected in a day or two. Very fast, completely online, very convenient. These are great services that facilitate life for small and medium businesses. And the last application that I want to mention, where the business can become a customer of the fintech company, is a concept that is not much known among people. It is what they call smart investing of free cash. That is often dependent on the type of your business model. You may have a free cash on your account, on your business account, which isn't used for quite a long time. And in order to utilize this cash somehow and to improve the returns of your business, you can actually invest these funds. The problem is that you need finance professionals to invest money in the proper way. At least you needed them in the past. However, now you have many services that enable you to invest successfully without having financial professional. That is, different automated AI-based advisors that find the best low risk, for example, or medium risk solution for you, and enable you to even further utilize the cash you have to improve the profitability of your business. So I would even generalize this concept more. Any business actually is about the return on money. So you get your money and use it to get certain return. And what the different fintech solutions do is they allow money to move faster, to move smarter. And thus, what they do in all types of industries, in all types of economy, is they enable money to make greater returns due to them being able to move faster.
I would also add, but not only money, but also securities or digital assets. So fintech is not just about the money or about the payments, but it's about how you manage your company or all the finance of your company, including stocks, including bonds, including the securities, in a one kind of melted pot where you manage everything online and be able to grow your business globally, fully online.
Yes, indeed. The securities as well are much improved through financial technology. Now the next thing I want to speak about is applications of second time. That is applications where the businesses partners with fintech solutions to provide better service to their clients. One of the most exciting things out there is when as a model which is called private label credit cards. That is when you issue you as a business partner with a bank or a digital bank and issue credit cards to your customers that are under your own label, under your own brand, where the credit line which they can use to purchase your goods or your services depends on their loyalty. That is, you A, enhance your brand and the loyalty of your clients, and B, you get more funds for your clients to spend on your goods or services. This is, I would say, one of the most curious latest applications of financial technology that I have seen, which I found maybe beneficial for many businesses.
I would also add, I've seen a similar case in China where it was an ice cream shop that basically was motivating their customers, who come in there on everyday basis, get an ice cream, is not with a discount for an ice cream, but a discount which is represented by their tokens, with their security tokens. So me as a ice cream lover would not only just get a morning ice cream or whatsoever, but I would also get some part of the stake of the company for being a loyal client. So next time, and this is a concept which I've seen in China, where they when a company decides to grow or to build, let's say, a next point of sale, they will ask their existing stakeholders who live in a closed area what would be the best location for that specific shop. And these clients advise the business, but not as just clients, but as their stakeholders, because now they're motivated and they'll be receiving dividends, they'll be receiving certain benefits from the company. They feel as if they're part of the company. So definitely they kind of participate in the company growth by devoting what would be the best location. And I think that's just an amazing tool of 21st century.
Yeah, I would say it is actually extremely powerful. In economic theory, you have, in the management theory, you have two competing ways to business management. One is called shareholder supremacy. That is when the primary goal of the business is to maximize the profits and the so-called shareholder value. And the second type of, and the second theory is called the stakeholder supremacy. And this theory has the fact that business has larger responsibilities than only to its shareholders. It also has responsibility to its employees, to its customers, and to a larger community in general. And one of the reasons why I find the concept that you described very powerful is that you can actually align shareholder and stakeholder supremacy in such a way. You can make your stakeholders people that are people and companies that are meaningful to your business. You can make them shareholders and co-owners of the business you own. And I believe it makes a lot of sense because often businesses are extremely valuable and important to local communities. Look at example of Detroit, for example, or many smaller villages. When businesses that were viable for that area went out of business, the cities died. This is how important they are as part of the community. and perhaps they would have been better if they could offer shares in their company, part of the ownership, to the community members, to their employees, to who could have supported this business in the difficult time to find a new model and to survive. So I find this really, really powerful.
So it's a kind of horizontal shift of your business throughout the globe, where the people who who like your business, who like your products or services, they become loyal to you, and but through that loyalty, they become stakeholders or shareholders, and it's kind of circular. So more of this going in, better business you are.
I would add even more. It's an opportunity for your business to transcend itself, to become something bigger than simply a piece of founder. So public companies, they by default are owned by entire world, by numerous investors, while private companies often stand on one or a few founders behind them. And you always have a question how you could leave something behind you and leave your business to live even when you go away, to leave a legacy. And giving your business to community, to your customers, to employees is actually a way for you to transcend your own existence and to leave a legacy and to make your business exist even after you pass away. So it's really extremely powerful concept, and it was a bit harder to realize in past when you had paper-based shares and when you had every single shareholder of your company to be written in the paper register given to the competent authorities. So it wasn't feasible. But tokenization enables it and makes ownership of businesses much more simplified. So I believe that the world will be a better place if we have more socially responsible businesses. And I hope that in the future, more businesses will adopt stakeholder supremacy and give part of their shareholding to their customers, clients, and partners.
Thank you. I think we'll be running out of time in a couple of minutes. What I want to just add is that, tell me if I'm wrong, I think that fintech is not a business by itself. It's something that you plug into your existing business, regardless the industry that you work. You can be working in transportation, you can be working in finance, you can be working in retail. Fintech is something that you plug in and enable new dimension of your business. Enable that horizontality and being able to attract international finance, manage international investors, payments, make everything much better in a more efficient way. And again, giving the fact that the world we're living now is changing, due to the virus, where most of the process will be managed online. I think that fintech is that drive of that transformation. I would say that like this.
Probably,
is that right?
The lines between industries are becoming blurred, and you have now financial companies becoming tech companies, having large development teams. You have you have agricultural companies becoming financial companies. One of the partners we are communicating with, you should probably know them, is a company in the agricultural industry that needs to do crowdfunding, but not for them, but to their customers, for customers to be able to afford their solution. So they build complicated utility construction worth 5 million, and they want for their customers to raise funds for this business. And you have such kind of synergy and collaboration between parts of different industries in almost any kinds of business. And modern business will be built on collaboration and on implementation of as many different tools as possible to improve their operations.
Boris, I think we're running out of time. We're already 38 minutes live. First of all, I want to thank you. I want to say thanks to our listeners. This video will be on YouTube. We will continue our discussions and our topics, our webinars about today. We spoke about the fintech and the applications of fintech. We're gonna on our next webinar. We're not sure about the topic yet, but guys, please send us messages, send us your feedback. How did you find this information useful for yourself? Ask us any questions. We're very public. We're open to communication. We will be assessing this and actually preparing, topics that are of your interest, which is very important for us. Again, we are focusing on the tokenization and the building fintech, assessing fintech, how it's possible to done for a specific business. I think that's a great industry to be, and it's a great time to live, because the transformation is huge. So thank you very much. Thank you, Boris. And
thank you, Jim. Thank you to all our listeners. It was a pleasure.
It was a pleasure. Thank you. Bye-bye, guys. All the best.
Bye.